Here we have the 4-hour chart for Bitcoin, cryptocurrency ticker BTC. This chart is in relation to the US dollar. As we can see here, the cryptocurrency declines continue, and this surge lower is really being led by Bitcoin, in my opinion. A lot of people like to kind of maintain loyalty to Bitcoin over some of the other altcoins. This idea that Bitcoin is going to automatically be more stable than the other altcoins, is really not the case. And this current decline here is a fairly good example of that. If you look at the videos that I'm posting today on Ethereum and Solana, you'll see two cryptocurrencies, altcoins essentially, that are faring a bit better here in this decline. This idea that Bitcoin is just going to, it's the original, so it has to be the most stable or something like that is really proving to not be true here. And I'm not really sure why people think that to be the case. I mean, especially, Bitcoin is the most valued. It's the most you can call it the most overvalued. I'm sure I'm going to get negative comments for saying that. But at least we can agree that it's the most expensive. Um, what that means really is that, if you're trading with an asset that's worth $74,000, it's just got much more room to fall than Solana, which has, $120 to fall. I mean, there's just not as much space there, to the downside. So, the potential for decline there is more substantial. I mean, that's not up for debate. Its value is higher, so it's got further to fall if declines do occur. So, this current decline here, I really do think that it should kind of dismiss some of the general cryptocurrency expectations. Because if you start to see an exit in long positions in Bitcoin, the volatility there could be more substantial than what you see in the other cryptocurrencies. This is what is happening at the moment. I definitely suggest that you take a look at my other videos today on Ethereum and Solana, because the selling pressure is extending into those cryptocurrencies, but it's nowhere near what we're seeing here. These are fairly substantial declines, and these are declines that I was expecting for quite some time. Um, I understand people don't like to hear negative commentary about Bitcoin, but let me just be perfectly clear here. I am not powerful enough to move the Bitcoin market on my own. Just because I post a video that might be a bit bearish doesn't mean doesn't mean that I myself is going to cause. I will not be causing a decline in Bitcoin. So don't get too angry. It's just I'm just not that powerful. Believe it or not. I know it's hard to believe. Okay, so. Anyway, I was expecting this decline for quite some time. There were just a lot of negative signals here. We can zoom out to the daily chart in a minute here, but really what I was expecting was a break below this $56,500 level. There were just way too many signals here that were pointing in the negative direction. We saw some fairly substantial price gains in a very short amount of time. We saw heavily overbought readings in the relative strength indicators. This would have been coming at the end of March. At the beginning of March. Um, uh, the sequence of highs that were posted after this rally unfolded in a way that created lower highs, a succession of lower highs. None of these highs retested this prior. We were just under $74,000. None of these price highs got there. This is a declining trend line here. This is not a trading range. It might look like a trading range at upper levels here, but that's not what it was. It was really a descending triangle. It's kind of a weak one, because we were seeing rallies here. These are very strong rallies into resistance. But you've got to do the chart work here, and you can't just kind of look, passively at a chart and say, okay, well, it's rallying, everything's fine. These were warning signals here, because even though we were seeing rallies, these were lower highs. And the declines unfolded in a more stable fashion than the rallies. The rallies were much less sustainable because they were happening more quickly. People were kind of buying in at these lows, and then these were short-term positions. And then as soon as prices started to reverse, those traders jumped ship. Those bullish buyers got out of the market as quickly as they could to try to capture profits. So there were just so many signals here. We're trading below all of the exponential moving averages. And now we've broken through this critical support zone. at 56,500. And this was really my line in the sand here. If I saw this, we're definitely heading into the lower 50,000s at this point. And we can kind of zoom out to the daily chart here to get a bit of a better look at where we could decline here. Currently, this chart should make it a bit more obvious that we are now trading through all of the major exponential moving averages. And this is significant because this is a daily chart. The prior chart was a 4-hour chart. It's all, moving averages are always important. We have to readjust the relative strength index trend line here because, as we can see, the readings on the daily chart are not going to be the same as the readings on a 4-hour chart, but the overall theme here is the same. I mean, I just had to bring this line down a bit. It doesn't change the trend. This is on multiple time frames here that we're seeing this type of, trend momentum that's visible. On the positive side, this is, I should have explained this on the 4-hour chart. This would be a little bit easier to see. But on the positive side, if I'm going to try to look for positives, we've got a little bit of a bullish divergence here. Like if you're really looking for positive reasons here, I'll give you one. We've got a little bit of a bullish divergence here. This is a little bit more clear, more easy to see. I wanted to talk about this on the 4-hour chart, but I've already changed here. So, the condition here is still present, where you've got a higher low in the indicator reading, and this is occurring as prices are declining. So as we can see here, prices are moving lower here, and the indicator is moving higher. Remove this other line just to make it a little bit more obvious here. But if we look at these two time periods here, if we look at the indicator reading and the price history, we can see that the indicator reading is pointed in the positive direction, and cryptocurrency prices are still moving lower. So that would be a bullish divergence. I'll give you a little bit of hope for optimism there. It's a bit too small, in my opinion. I think this larger structure is still going to be dominant. We can kind of just look at this in this broader context here. You've got a very small, shorter term trend line. That doesn't mean it's not impossible for prices to start turning around here. But what I'm saying is that I don't expect this to be true because the dominant forces here are still pointed in the downside direction. You can look at this, this downtrend in momentum versus this much smaller uptrend, and then you can put your chips anywhere you want. I mean, if you do think that this is strong enough to point in the positive direction and to argue for, buying at these lows, you can go ahead and do that. In my view, we've already broken through my critical level here, which was 56,500. And we posted some fairly significant lows here. We're looking at roughly 53,500. So, overall, I am looking for a decline back below 52,000 before we can expect to see any real turnaround here. There's just too much pointing in the negative direction, and there's just not enough here for me to get bullish. This minor buy signal here is just not strong enough in my view. You're going to have to be patient and wait. Unfortunately, that's the reality. So here's the current market analysis for Bitcoin, cryptocurrency ticker BTC.